So the Bitcoin Treasury company doesn't take management fees, doesn't need to take leverage, and doesn't risk the Bitcoin. The Bitcoin stays there. You don't touch the Bitcoin.
So a great hello to everybody. So today we are meeting with Alexandre Laizet, the principal of the blockchain group, which happened to be the number one European Bitcoin treasury company. The company is publicly traded for now on the French stock exchange, but things may evolve in a very near future. So Alexandre, it's a good opportunity to make a point about the blockchain group, understand better the business model of the Bitcoin treasury company, and maybe we can start by having you introduce yourself and maybe get us to understand exactly what is the blockchain group and what are your plans and current position in this new market segment.
Thank you so much for the invitation. As you mentioned, the blockchain group is Europe's first and largest Bitcoin treasury company in Europe, and we are fully focused on maximizing the number of Bitcoin per share over time in the context of Bitcoin being adopted at scale by financial institutions, governments around the world. Bitcoin treasury companies provide the possibility for investors to get more exposure to Bitcoin. And how you get more exposure to Bitcoin is through the increase of Bitcoin per share of the Bitcoin treasury company, which is a listed entity, in our case on Euronext Growth Paris under ticker ALTBG. And how a Bitcoin treasury company can do that is by issuing securities in the market and to accumulate Bitcoin aggressively with the proceeds. So we launched the strategy back in November 2024. And in about 8 months, we went from 15 Bitcoin to 40 Bitcoin to 620 Bitcoin to 800 plus, 1,200 plus, and now 1,900 plus Bitcoin on the balance sheet. We started by having announcements every month, and now we are having announcements every week about new equity or BTC denominated converts announcements and about the purchase of more Bitcoin. And so we are fully focused on maximizing Bitcoin per share for investors, and that is how we can provide an exposure to investors to have a form of levered Bitcoin exposure without the risk of a margin call like in a crypto exchange. We are not a fund, we are not an exchange, we are an operational company that is able, through its capital markets activity, to increase the number of Bitcoin on the balance sheet faster than it increases the number of shares. And so in that way, we are able to provide more Bitcoin per share over time for an investor. And for example, you can start with 0.1 Bitcoin per share, theoretically, and end up with 1 Bitcoin per share after a certain time horizon. And so effectively, a Bitcoin treasury company is here to buy Bitcoin for you when you make an investment, rather than an ETF where it's a full one-to-one with your initial investment, and on top of that, the ETF is taking management fees. So the Bitcoin treasury company doesn't take management fees, doesn't need to take leverage, and doesn't risk the Bitcoin. The Bitcoin stays there. You don't touch the Bitcoin. And through the issuance of securities that are in demand in the capital markets, the company is able to become potentially one of the most valuable companies on earth if it is able to accumulate the most Bitcoin possible, and if, of course, Bitcoin does not fail.
Okay, so I noticed since January 1st, your stock grew by over 1,100% on the Paris Stock Exchange, and still the Bitcoin only grew in dollar denomination by 26% and in euro denomination by 13%. So how do you explain this huge difference? Are you using a lot of leverage? I mean, how does that work under the hood?
So we didn't take any leverage to provide this type of performance in the market. The model of a Bitcoin treasury company has been decomposed mathematically by Tobam, a 2 billion French asset manager that has been leading the way in France for Bitcoin since 2017. It's a team of mathematicians, and they have laid out the 3 factors to value a Bitcoin treasury company. The first one, that is of course of a major impact, is the evolution of the Bitcoin exposure itself, the price of Bitcoin and the balance sheet. And the second one is the BTC yield, the increase of Bitcoin per share. And the third one is the BTC premium. And so you can fully explain the outperformance of Bitcoin by Bitcoin treasury companies with those 3 factors without any type of debt or leverage needed. So on the other side, what a Bitcoin treasury company needs to do is to securitize Bitcoin to create securities that will provide a form of exposure to investors. And how this activity creates value on the other side for the investors, and how you are able to generate a plus 1000% performance, is because in our case, in one single operation, for example, in March, we were able to increase the number of Bitcoin on the balance sheet by 15x, while we increased the number of shares issued and to be issued by only 2x. So that is an increase in Bitcoin per share of 8x, which is materialized in the KPI, the key performance indicator of BTC yield, as a BTC yield of 700+%. And that was in one single operation in March, but then between March and June, we were able to more than double the number of Bitcoin on the balance sheet, because we went from 620 to 1,900. And so at the same time, we increased the number of shares in a much lower amount to achieve this increase of Bitcoin. And so year to date, we have been able to generate a 1,300+% BTC yield, the increase of Bitcoin per share. And so when you put that in perspective with a 1000% performance, it all makes sense, because, well, it's literally the reevaluation of the value of the company based on the value it has literally provided by increasing Bitcoin per share, plus the anticipation of the market, the BTC premium or the MNAV, of the potential of the company to continue to increase the number of Bitcoin per share, because that is effectively the earnings for Bitcoin treasury company. It's not earnings in the traditional sense, but effectively it is the Bitcoin that you are adding to the balance sheet, adjusted for the dilution, meaning adjusted for the new shares you have issued. Imagine you add 1000 Bitcoin on your balance sheet, but you issue 2x the number of shares, then you have a form of earnings of 500 Bitcoin. And that is like traditional cash flows in some way, but that go directly straight to the balance sheet without the hurdles of the uncertainties of traditional finance and traditional operating businesses that raise capital. Because when a traditional business raises capital, they have to spend the money in the promise of getting back to the investors more money later on in 5 years. In our case, we are able to transform within 4 to 5 months. At least that's been what we've been able to do for year to date, for the last 7 to 8 months, where we've been able to completely transform what was a market cap on a fully diluted basis into net asset value of Bitcoin. So literally, we started with a market cap of 15 million, and now we have about 200 million of Bitcoin on the balance sheet. And so that's extremely accretive for the investors that have long-term focus and conviction in Bitcoin and in the ability of the management to be able to increase Bitcoin per share over time.
Okay, so how do you buy your Bitcoin? Are you buying them on the market? Do you do a person-to-person, institution-to-institution deal? Do you buy them in dollars or do you buy them in euros?
So it depends on the type of operation that you are doing. We have, when we raise equity, we receive cash. And in this case, we directly buy the Bitcoin as soon as possible with our banking partners. So it's Banque de Lubac in France, and it's Swissquote out of Luxembourg, regulated in Luxembourg and Switzerland. And we also have the capacity through our SPV, special purpose vehicle in Luxembourg, to issue BTC denominated convertible debt, which is a convertible debt instrument, but that doesn't add any leverage to the balance sheet because it is BTC denominated. And so on one side we have BTC, and on the other side we have the BTC denominated convertible debt over 5 years, which allows, if you believe in Bitcoin and in our capacity to continue to execute, which puts almost all of the probabilities into the probability of converting that convertible debt into the shares of the parent company listed in France. And so when we sign contracts directly in Bitcoin, we receive Bitcoin directly into our segregated wallet in Luxembourg with Swissquote, where in that case, we don't need to buy Bitcoin because we directly received the Bitcoin. So we can take in subscriptions in fiat or in Bitcoin. And when we take in subscriptions in fiat, we directly accumulate Bitcoin with our banking partner.
Okay, so if I understand well, there is two ways you finance your acquisition, through equity and through this bond issuance. What is the current balance between the two?
We have raised significant amounts of the capital that we have on the balance sheet through BTC denominated convertible bonds. Specifically, it should be around 85% of the capital that we have raised. And that's mainly because, frankly, it's been the best and most efficient way to raise capital, both for the company and for the investors. It's literally the unique way to subscribe to a Bitcoin treasury company directly in Bitcoin. And so it was better for investors, and so we did it. And most of those BTC denominated convertible bonds are largely in the money, meaning that the subscription price of those converts was back in March between 0.54 and 0.7. The share price currently is 4 to 5. So the probability of non-conversion is extremely low. Basically, it would be the probability that Bitcoin fails. And in this case, we would have to give back Bitcoin. So, the risk for the company is extremely low. The advantages for the investors are extremely high because you can get a form of call option on one of the top performing Bitcoin treasury companies with the risk downside protection of a bankruptcy remote SPV wholly owned by the blockchain group, but which sole purpose is to hold Bitcoin at perpetuity, never sell it, never touch it, and hold on the other side BTC denominated converts at a 5-year time horizon, which puts almost all probabilities into the conversion of those converts into the shares.
Okay, so if I understand well, the shares are publicly traded, but the bonds are not publicly traded right now. That's correct. Okay. So what is the strike price for the conversion, and what is the maturity for the bond?
Yes. So the strike price, I will give you a very concrete example. We were back in February and March, and the price of the stock at the time was around 0.40 euros. So the conversion price was calculated by adding a 30% premium. And so that's how we ended up with a conversion price of 0.544. And the strike price, meaning the price at which you can call for the conversion, in this case was 0.707. And it was, again, plus 30% on top of the conversion price. So you see, we are at 4 euros. So all investors can effectively today call for the conversion. Then we have issued other converts later on that have higher conversion prices, some of them around 5, around 6, even higher for the tranche 2. And so the mechanism I can describe very simply. It's a 5-year maturity, 0% coupon, so no interest. If the company doesn't execute or there is a major problem, bankruptcy event or this kind of things, the investor can get back the Bitcoin. And if there is no conversion after 5 years, the investor can get back the Bitcoin. But if the company continues to execute normally, and if Bitcoin continues in its normal trend, 99% of probability is that there will be a conversion, because we are speaking of a strike price of 70%, basically. Bitcoin itself grows by 30 to 90% on a 5 to 10 year horizon. If you annualize the performance, it's 30 to 90% of annual performance, maybe even closer to 30 as of today. But if it does that in 1 year and you have an horizon of 5 years, then you know that specifically if, again, the company continues to increase the number of Bitcoin per share and so increases the net asset value of the company, we have generated year to date 1000% BTC yield. If we were able to do that again, even in 5 years, that would be largely above the strike price. So it's an arbitrage between fiat and Bitcoin at this point.
Yep.
So those are the key parameters. I would just end by the two last important ones, is that the conversion is at the hand of the investor over the whole 5 years, and the conversion is at the hand of the company as well over the last 2 years, which protects the company from any specific date short selling type of arbitrage in the market, and which effectively says, look, we give 3 years to see if the company executes normally and has no major issue. And if it's the case, if the company succeeds and Bitcoin continues in its trend, then there is no reason why the company couldn't convert.
Okay, I understand. You mentioned that the Bitcoin that have been provided by the bondholders are protected from any bankruptcy proceedings. Who owns the Bitcoin currently? The bondholders or the blockchain group? Because the Bitcoin are on your balance sheet, but still there is a lien that guarantees that the bondholders will get the Bitcoin back if you get into a bankruptcy proceeding. Correct.
So, correct. It is not a collateralized convertible bond. It is not a secured convertible bond. However, it is a bankruptcy remote SPV. And so, in the case of a bankruptcy event, then the bondholders have the right to ask for early redemption of the convertible bond. But the Bitcoin is the company's Bitcoin. It's a convertible bond. So it happens to be denominated in Bitcoin at the end, but it's the company's Bitcoin. It's on the company's balance sheet. And the investor and the company, of course, have the incentive of that converting over time with the intention to outperform Bitcoin with the increase of Bitcoin per share over time.
Okay, I
So
understand.
the reason for this is that you don't want to add over complexity to the model. You don't want to be creating one SPV per investor or per group of investors. You want a fully scalable nuclear reactor Bitcoin accumulation machine that is an SPV that is always on for new issuance of convertible notes subscribed in Bitcoin or in fiat, but that will be converted in any case in Bitcoin. And the whole point is that the company does not touch the Bitcoin. if a company is doing this and plays with Bitcoin, that is a major risk. The whole purpose of this SPV is to hold the Bitcoin forever and to keep that in cold storage, bank grade custody, and to focus as a management and board on maximizing the number of Bitcoin per share to be able to largely outperform the strike price without even the price of Bitcoin moving.
Okay. Okay. Under the current metrics, it looks very attractive to convert the bonds into equity. But then again, if you have 20% financing through the equity and 80% financing through the bond, then it becomes very dilutive for the original shareholders. How do you manage that issue?
I understand. So the dilution is calculated at the very beginning. So the number of potential future shares to be issued based on the conversion of the convertible bonds is calculated already at the time where you add the Bitcoin on the balance sheet. So when I mentioned the example of the March operation, we added 580 Bitcoin on the balance sheet compared with 40 Bitcoin in January, and we added 2x the number of shares. So at the time, we went from 100 million shares to 200 million shares. But that is on a fully diluted basis, meaning that the common shares stayed at 100 million, but the shares to be issued, meaning the fully diluted basis, including the common shares and the shares to be issued, that increased to 200 million already. So all of our metrics, the Bitcoin per share increase, is always based on a fully diluted basis, including the shares to be issued in the future. And so in that way, as an investor, you can calculate at the operation level what is your increase in net asset value considering the future dilution. So it is a postponed dilution, but for conservative economic calculation, you need to account for that dilution since the very beginning.
Okay. So basically, it's a bond with a subscription option to a share at a later date.
Yes.
In French, we call it APSA. I don't know if it's still used, but okay. Another question. So you put together an ATM line to finance successive increase in equity. Can you explain to us how that works?
Yes. So just to piggyback on what you just mentioned, you know, a lot of traditional financial tools and typically convertible bonds are having a bad reputation in traditional finance because of the typical use of those instruments in traditional finance where you raise capital to literally spend the money directly and hope that some operations will pay back this capital raising. In our case, we literally keep the money. We keep the Bitcoin on the balance sheet. And so if you believe in Bitcoin, that is the best thing to do as long as you have a long-term maturity and a long-term perspective and that you are not playing with the Bitcoin. So that's something that is quite important to remember. Then on the ATM type structure that we have added on June 9th, we have announced an ATM type program with French 2 billion asset manager Tobam, who is also a shareholder that has about 5% of the capital. And so what they are able to do is to help us accelerate the accumulation of Bitcoin on a weekly basis. When that is possible, of course. But that's the whole principle, is to inspire ourselves from what has worked from strategy and from Metaplanet, for example, and allow Tobam to have the capacity to, with safeguards, and I will mention the safeguards, and in a long-only type of way, to sell some shares in the market to use the proceeds to do a new capital raise at the price of the day before the request. And so effectively every day Tobam has the right to subscribe to a new capital raise with the blockchain group at the highest of the following three options. First, the closing price of the day before. Second, the volume weighted average price of the day before. And third, the 20-day moving average of the last volume weighted average prices of each day, minus a maximum of 15%, which allows, and again, the highest of those three, which allows for a form of long-only type of ATM. ATM means at the market, and it means issuing shares to sell them in the market and raise capital. That is based in the US. In France, we don't have the same, in Japan as well. And so what you can do is this type of program where a long-term partner is working to transform its stock of shares into new Bitcoin on the balance sheet of the company. And so that's extremely accretive, especially accounting for the fact that Tobam is only, of course, incentivized to do this when the share price is in strength, meaning that it's not because of Tobam that a share price can go down, frankly. So that's literally engineered to monetize the moments where the share is in strength to benefit the shareholders with an increase of Bitcoin per share over time. And of course, the company also has the right to suspend the program if the conditions are not accretive for the full objective of maximizing Bitcoin per share.
So is there a lockup period for the shares acquired by Tobam through this ATM process?
No. Effectively, the objective, if the conditions are met, is that Tobam could do that every day, you know. The most that they are able to do it, considering the accretive conditions I mentioned, and considering enough volumes, the objective is that that program could be used as much as possible if and in conditions where it doesn't affect the stock price. And so there can be, of course, effects because literally Tobam has the right to sell some level of shares with the limit of 21% of the volumes of the day before and the highest of the three conditions I mentioned, which is a lot of conditions. And so under these conditions, basically Tobam is really only doing it when it's accretive for shareholders in many ways. So the trade-off is that if there was no ATM type program, you would see a higher type of share performance because there would be less shares to be sold on the market. At the same time, you also want, as a shareholder of a Bitcoin treasury company, the company be able to accumulate Bitcoin on a weekly basis. And so that's effectively what we've been doing since the launch of this program. And that's extremely accretive for all the existing shareholders, of course.
Okay, I noticed that the share price went down recently, and is there a relationship between the program and what happened? I mean, how do you explain this decrease in the recent months?
So that decrease could be related to many factors. Under the conditions I mentioned, it is highly unlikely that this has had an effect, a major effect on the share price. Effectively, as I mentioned, on up days, it can be that the up day is slightly lower than what it would have been without such a program, but I'm speaking of an up day, not a down day. So effectively, when it's a down day, it's not because of Tobam, you know. Nothing would stop them from doing other type of actions in the market, but effectively they have no interest to do it. It would be against their interest because they are incentivized for the stock price to go up to be able to sell a little bit of shares in a way that doesn't affect the stock price, to be able to then do a capital increase that increases Bitcoin per share, which is also beneficial for their own shares. And they also have funds, of course, it's on behalf of funds that have subscriptions. And so that's also beneficial to their fund holders. So nothing at all really related to TOBAM itself. What I've seen in the market that could explain a little bit more that short-term decrease in the share price. And I would like to remind that the minimum time horizon for Bitcoin should be at least 4 to 5 years because of the last historical performance and frankly in any type of investment. And I would not see why the time horizon for a Bitcoin treasury company would be lower than Bitcoin itself. So that's the first caveat I would like to say. If you look at the price performance over 1 month, you can indeed observe that the share price is down 30% while the Bitcoin is up 10%. But I would invite to zoom out and to look at the 6 months where Bitcoin is up 20% while the share price is up by 1000%. Then on the other side, I understand shareholders, and we treat all shareholders with the same amount of respect, that would have entered the blockchain group 1 month ago and would be down as of today. And so that's of course a situation that we are working relentlessly every day to improve because of all the work we do to increase Bitcoin per share. But Bitcoin per share is Bitcoin per share. So it's BTC denominated, it's not fiat denominated. So you can have an excellent performance of Bitcoin per share, and in the short term have a less strong performance or lower performance in terms of fiat. And so it's important to project yourself in a longer term. Specifically, as an investor, when you know that a Bitcoin treasury company like us take about 4 to 5 months, which is extremely quick even for the Bitcoin treasury companies that are more between 5 to 15 months. Well, when you know that the company takes historically 4 to 5 months to transform the premium into net asset value, you know that if you have a time horizon of investment of lower than 4 months, then you are taking some risk. Maybe you will get highly rewarded, but maybe in a short term, you can also suffer some down days. And so I think in terms of factors, what the market has shown is that first, the market expect us to conduct a significant operation that would increase radically the number of Bitcoin on the balance sheet. And we are, of course, working relentlessly on this objective all days with investors. And the second aspect is that you've had a lot of new Bitcoin treasuries launching with not that much new investors. And so what you get inevitably is some level of additional type of competition in terms of attention of investors. And so that's undeniable. And at some point, if you're able to do a very significant operation, you might as well see that that attention fully come back to the blockchain group. So what matters, because I would like to highlight, every company is on its own time horizon, own steps towards the building of a Bitcoin accumulation machine. For example, Strategy launched back 5 years ago and has outperformed most and all of the market, frankly, in terms of share price performance for those type of size. Then MetaPlanet launched and they have outperformed everyone. Then we have launched in November and we have outperformed everyone. When you looked at specific time horizons, we've done plus 3,000, plus 4,000% at some points. And the best performing stock over in Europe and so on. And then the Smarter Web company launched and they outperformed everyone again. But then if you zoom out and you look 1 year away, well, the outperformance will be different. If you look 5 years away, now the performance will be different. What matters is to understand that as an investor, you need long-term focus and conviction to know which management team, which leadership team has the most potential to maximize your number of Bitcoin per share over time, and to make your own decisions based on, of course, market factors and the capacity of the company to continue in this direction. And so the ATM type program of TOBAM has been intended to maximize the number of Bitcoin per share but on a more regular basis, while we are also working in parallel to potentially at some point in the future conduct a similar sizable operation in similar ways as in March earlier this year, where we significantly increased the number of Bitcoin in the balance sheet and at the same time as increasing the number of shares at a lower pace. And so, of course, that can not happen. That can happen in a short manner, in a medium manner, in a long manner. But when you invest in a Bitcoin treasury company, you really invest in a company that is able to regularly acquire Bitcoin at the same time that they prepare for massive capital market operations. And I think that's what also distinguishes the blockchain group with our SPV nuclear reactor in Luxembourg, where we are able to provide a very valuable investment proposition for investors on a risk-adjusted basis that can provide a form of amount of capital that is completely potentially different from what you can see elsewhere in the market.
Okay, I understand. Okay, Alexandre, this has been quite interesting. Maybe a final question. Do you intend to stick to Bitcoin, or will you consider at one point to accumulate other cryptos? And if so, which one?
So it's a full Bitcoin blown strategy. We are Bitcoin maximalists, and we believe that all other assets are going to zero against Bitcoin. So there is nothing better than Bitcoin. There is no second best, and we fully focus on Bitcoin. We are laser eyes focused on maximizing Bitcoin per share, and any other assets would reduce that Bitcoin per share.
Okay, well, so thank you for your time. As I said, it was quite interesting. I think this is certainly an investment opportunity to consider, and I just wish you the best for the rest of this year. Thank you.
Thank you so much. Thank you so much. And looking forward to the next one. Cheers.